How to invest like Warren Buffett. Hey guys, today we're going to know how to invest like Warren Buffett. Let's get right into it. Warren Buffett was born in 1930 in Omaha. He became interested in the business world and investing, including the stock market, at a young age. Buffett began his education at the University of Pennsylvania's Wharton School before transferring to the University of Nebraska, where he earned an undergraduate degree in business administration. Buffett later attended Columbia Business School, where he earned a master's degree in economics. Buffett began his career as an investment salesperson in the early 1950s, but Buffett Associates was founded in 1956. He took over Berkshire Hathaway less than 10 years later, in 1965. Buffett announced his intention to donate his entire fortune to charity in June 2006. The Giving Pledge campaign was founded in 2010 by Buffett and Bill Gates to encourage other wealthy individuals to pursue philanthropy. Buffett adheres to the Benjamin Graham Value Investing School of Thought. Value investors seek securities with unjustifiably low prices relative to their intrinsic value. There is no universally accepted method for calculating intrinsic worth, but it is most commonly estimated by examining a company's fundamentals. The value investor, like bargain hunters, seeks stocks that are undervalued by the market or stocks that are valuable but are not recognized by the majority of other buyers. Buffett takes the value investing strategy to a new level. Many value investors disagree with the efficient market hypothesis. According to this theory, stocks always trade at their fair value, making it more difficult for investors to either buy undervalued stocks or sell them at inflated prices. They believe that the market would eventually begin to favor those quality stocks that were previously undervalued. Buffett, on the other hand, is unconcerned with the complexities of the stock market supply and demand. In fact, he is unconcerned about the activities of the stock market. This is the implication of his famous paraphrase of a Benjamin Graham quote: "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." He considers each company in its entirety, so he selects stocks solely on their overall potential as a company. Buffett holds these stocks as a long-term investment, not for capital gain, but for ownership in high-quality companies that can generate earnings. When Buffett invests in a company, he is unconcerned about whether or not the market would eventually recognize its value. He is concerned about the company's ability to generate profits. On top of that, Buffett usually only considers companies that have been in business for at least 10 years. As a result, most of the technology companies that have gone public in the last decade would not be on Buffett's radar. He has stated that he does not understand the mechanics of many of today's technology companies and will only invest in a company that he fully understands. Identifying companies that have stood the test of time but are currently undervalued is required for value investing. Never underestimate the importance of past performance. This demonstrates the company's ability to add value to its shareholders. However, keep in mind that the past performance does not guarantee future performance. The job of the value investor is to predict how well the company will perform in the future. This is inherently difficult to determine. Buffett, on the other hand, is clearly very good at it. One thing to keep in mind about publicly traded companies is that the Securities and Exchange Commission requires them to file regular financial statements. These documents can assist you in analyzing critical company data, such as current and historical performance, in order to make sound investment decisions. Buffett also considers its commodity reliance. This question may appear to be a radical approach to narrowing down a company at first. Buffett, on the other hand, considers this a critical question. He avoids companies whose products are indistinguishable from those of competitors, as well as those that rely solely on a commodity like oil and gas. Buffett sees little difference between a company and another in the same industry if it does not offer anything unique. Buffett refers to a company's economic moat or competitive advantage as any feature that is difficult to replicate. The larger the moat, the more difficult it is for a competitor to gain a market share. Finally, is it inexpensive? This is the real kicker. Finding companies that meet the other 5 criteria is easy. Determining whether they are undervalued is the most difficult aspect of value investing, and it is Buffett's most valuable skill. To test this, an investor must calculate a company's intrinsic value by examining a variety of business fundamentals, such as earnings, revenues, and assets. And a company's intrinsic value is typically higher and more complicated than its liquidation value, which is what a company would be worth today if it were broken up and sold. Intangibles such as the value of a brand name, which is not directly stated on the financial statements, are not included in the liquidation value. Buffett compares the intrinsic value of the company as a whole to its current market capitalization, its current total worth or price. Doesn't it sound simple? Buffett's success, on the other hand, is dependent on his unrivaled ability to accurately determine this intrinsic value. While we can outline some of his criteria, we have no way of knowing how he achieves such precise mastery of value calculation. As you may have noticed, Buffett's investing style is similar to that of a bargain hunter. It reflects a pragmatic, down-to-earth outlook. Buffett maintains this attitude in other aspects of his life as well. He does not live in a large house, he does not collect cars, and he does not commute to work in a limousine. The value investing style has its detractors, but whether you agree with Buffett or not, the proof is in the pudding. That's all for today, and we'll be sure to catch you all in the next one.